Greetings. What up? You got Mr. Smith, point 0.5 of Mr. and Mrs. Smith, and I'm going to keep this video short and sweet for training purposes as well as attention span purposes. But I want you to just see the power of the W-4. We decided to do this as a presentation that we're going to make available to the public, but at the same time as a training. But a lot of people miss the power of the W-4. So because they are terrified of touching it sometimes, they don't realize the money that they're missing out on. So we feel like this would be a good training and just a good public display of how money that you're leaving on the table could potentially make you wealthy. Now, this is what you have to understand about the W-4. It is the beginning of the year. The beginning of the year is a great time to revisit it. Now, of course, you can revisit it any time, but being that it's the beginning of the year, at the time of this recording, it's currently the beginning of 2021, and we've done a couple of these. We still want to stress the importance of the power of the W-4, how to fill it out. We've done an example on head of household. We've done an example of married with a child. We may do a couple others, but this one is going to be for the individual who is single. So if you want one of the other ones that we've done, then it's available on our YouTube channel. However, if you want the single one, then this one is for you. Or if you have a totally different one that you want us to go over, let us know. And I want to give a shout out. I'm going to just do a blanket shout out because I don't know any of the names right off the top of my head. But shout out to anybody who joined us in the royalty movement, which is our economic empowerment movement, where we help people understand finances, where we help people understand personal finances, to be specific, with an emphasis on debt elimination, increasing their cash flow, investing, learning the terminology, and bettering their credit, whether they want to do it themselves with some guidance or they want to bring us on to do it for them. That's, something we specialize in. But those who join the royalty movement are people who typically want to do it themselves, and we got a blueprint, a game plan, a way to make that happen. Now, with that being said, let's talk about the W-4. How did I get to where I am? I just pretty much went to IRS.gov. I hit forms and instruction, clicked on the W-4, and then it had the option to click on tax withholding estimator. Now, I will say this, as we always say in other videos, that before you begin, you want to have your most recent paycheck stub. And if you feel like you have any other information of sources of income, then you want to have that available as well. And then they ask for a most recent tax return due to the fact that sometimes people don't remember if they qualify for the earned income credit, child tax credit, child care tax credit. So it's beneficial to have it in front of you. Why? Reason being is that the more accurate you are with this estimator, the more accurate your results will be. So it'll be a lot less guessing or wondering how is your tax scenario going to play out the following year. If you're accurate with the information that you submit by having it right in front of you, then the information that you're giving, that you receive, would be highly accurate for you. So that's the reason why. But many times, most people just have a check stub and they don't need that other stuff right off the bat. So we'll use this example just based on a check stub. And I'm going to throw out some numbers. There may be some preset numbers in here that I may use, but I just want to make it simple. I don't want to overcomplicate it because somebody falls into this category. Single, no kids, just need to know how to fill it out for themselves. So after we got that out of the way, just click on Use Tax Withholding Estimator, and as you can see, it'll be broken down into 6 different steps, starting with About You. And it says, use your best estimates for a year ahead to determine how to complete Form W-4 so you don't have too much or too little federal income tax withheld. Many people don't realize that most of the time people overpay in federal income tax. Well, the beauty of federal income tax, and I say the beauty because some people probably think taxes, what's beautiful about taxes? The beauty of the federal income tax is that you have the most control over it. There's a lot of taxes that the list runs, long as the grocery list, that you have no control over. You just got to pay it when you pay or when you get paid. It's just automatic. But the federal income tax has the beauty of you being able to control it, whether you control it using this W-4 form, or if you control it like we recommend by using or having a home-based business as a vehicle to help you legally, ethically, and morally minimize your taxes. So that being said, understand the power of the W-4 and you keeping more of your income. And by the second part of this video, I think you'll understand where I'm coming from. So it starts with About You. And I told you I'm going to go through this fast. So if by any means I'm going too fast, you got the ability to pause. You're watching the replay. So pause, replay, do what you got to do in order to catch what I'm putting down. That being said, About You. Select the information that best describes how you anticipate filing 2020 tax return. So I just stated this is going to be a person who's single with no kids, so we'll click single. May another taxpayer claim you as a dependent on your tax return? The answer is no. Do you plan to claim dependents on your tax return? The answer there is no as well. Income, because they want to know about your income. They want to know all of the money you're making. Why? Because they want to be able to tax it. Just the nature of, the government. I'll say that. Income. Do you or will you hold a job this year with paychecks from which federal income tax is regularly withheld? Yes, that's the reason for filling out this form. And I will say this. Anytime it's a question that's being asked, if you're unsure, it's a blue question mark that is beside each question. That way, if you're unsure about anything, you can always click that and get them to expand on the information that they're going over. In this case, I would not be clicking on a lot of the question marks because I, want to really get this out and make this short and sweet for short attention spans. But just know that if you get caught up or if something isn't clear, hit that question mark and it's pretty thorough in the answers. That being said, let's proceed. How many jobs do you expect to hold this year? Include jobs you no longer hold. In this case, we'll do one. And the reason why they say include jobs you no longer hold is because even though you may no longer hold that job when it's time to file taxes, that job will be on there as well. So that's why you want to put it. But on this case, we just have one, no other jobs. Pension, will you receive income from pension this year? No. 5. Other, check all that apply. Other sources of income and tax payments. As I stated, they want to know all sources of income. In this case, this person has no other sources of income, nor do they qualify for any of these, being blind or being 65 this year. Now, it's time to put in the information pertaining to your job. Do you expect to hold this job the entire year, January 1st through December 31st? Yes. How frequently are you paid? We're going to say every 2 weeks. And keep in mind, every 2 weeks and twice monthly are two different things. Every 2 weeks is basically every other Friday. Twice a month is basically 1st and 15th, 5th and 20th. If it's specific dates, then that's what justifies it being twice a month. Every 2 weeks is every other Friday or every other Thursday. You know how you get paid? I just want to, make that note because it does make a difference. On what date did your most recent pay period end? We're going to say that the most recent pay period ended on the 8th. We'll just make it plain. All right. Enter the total wage you expect to receive this year. We're going to say $32,000. That's a number that we've used before, so we're going to roll with it this time as well. Enter any bonuses. We're not going to say that this person has any bonuses coming, so we'll just leave it there. Using your last pay statement, enter the federal taxes withheld. So in this case, we're going to say that the federal taxes withheld, we'll say that it was, I'm going to say 160, just because last time we used 84. So in this case, matter of fact, I'm going to say 170. I'm going to just double that number. Like I stated, I'm just putting some numbers in because this one is year to date. So let's say they got paid on the 1st, and then they also got paid on the, let's move it up. Let's move it up. Let's say they also got paid on the 15th. So that way we'll double it up. That's how I'll do it. That way. All right. No bonuses. Year to date, 170. Per pay period, we'll say $85. Did you or will you contribute? And notice, the year to date is going to be cumulative, so that number is going to be bigger. The pay period is what you actually got taxed in federal income tax on that pay period. So pay attention to the verbiage so you make sure you enter in correctly. Did you or will you contribute to a tax-deferred retirement plan such as a 401k, etc.? Now, if that's you, then you'll fill it out accordingly. But if not, but on this scenario, we're going to say no. Did you or will you contribute to a HSA, FSA, pre-tax child care credit account, or other federal or other cafeteria plan? No. We'll leave it there. Go next. Adjustments to income. Most taxpayers don't have a large enough adjustment to have a significant impact on their tax obligation. Do you want to go to the next step without including adjustments, or would you like to see possible adjustments? I'm going to do this because it is important just to see the options that are on there. But in this case, we're going to leave it blank and just proceed. But as you can see, it's certain things that could have an adjustment to your income and lower your tax liability. So it is a good thing to go through that and see if you qualify. Next, deductions from income. You qualify for a standard deduction of $12,550. That's the standard deduction. And as it relates to that, sometimes people feel as though they itemize when they're paying donations or paying tithes or things of that nature. But if it's not more than what the standard deduction is, then it's pointless, and you'll see what I mean. Deductions reduce the amount of your income subject to income tax. Most taxpayers take the standard deduction. Would you like to take standard deduction or itemize your deduction? And if you see here and you read in detail, you'll see that the standard deduction is a specific dollar amount that reduces your amount of income subject to tax. Your standard deduction amount depends on your filing status, whether that's, single, married, filing jointly, head of household, all of those things. But you got to understand, if your itemized deductions don't outweigh the standard deduction, then it's going to automatically make you take the standard deduction. Or if you choose to take the itemized deduction, you're doing yourself a bit of disservice. Like it says, if your itemized deductions are less than your standard deduction, the calculator will use the standard deduction. All right, so we're just going to go next because we'll put nothing in there. Tax credit. Tax credits are amounts you subtract directly from your tax obligation. Would you like to learn about tax credits you may be eligible for? Now, on this, we're going to just click to see it. And you'll see child and dependent care. This person doesn't have any children, but just see what fits or what may fall into your scenario, because there may be some tax credits available. You might have an EV, basically an electric vehicle, energy efficient vehicle. But right here, we're going to just say, get my results without tax credits. So now it brings us to this page, and this is a powerful page because it gives you your results, which minimizes the guesswork. Many times people used to fill out this W-4 form, didn't know what to expect. So it says your estimated overpayment is $157. You're likely to get a refund. So in this case, this person single with no kids will get a refund of $157 because most people who are single with no kids end up paying more. But let's just say that this person wants to adjust their scenario because it says happy with your results. You don't need to do anything. Want to adjust your results, use this slider. So let's say this person says, you know what? I want to get a $1,000 refund. What it says, to get your desired refund amount, you will need $120 withheld from each paycheck, $35 more than your current withholding. However, because nobody typically wants to pay more, but if this person said they want to get $0 in the form of a refund, it says to get your desired refund amount, you would need $78 withheld from each check, $7 less than your current tax withholding. So with this person being single with no kids, it's not a lot of leeway because it's like they're saying that this person is paying close to the right amount of taxes. In most cases, and I'm going to leave it like this because this may be a person's exact scenario, but in most cases, people are overpaying $200 to $800 a month. So they're leaving $200 to $800 on the table because they have kids, they qualify for certain things, so their tax liability is lower, which means that they are overpaying in taxes. But this may be someone's exact scenario. So if you're single with no kids and your information looks like this and you wonder why you're not getting the same type of return as somebody else, that's just how it goes. Sometimes when you're single with no kids and no other things to lower your tax liability, you end up paying, more or not getting the largest refund. That's just the fact of the matter. Now, as it states, and I'll put it back where it was at the 157, if I can get it there, perfect. Then you'll be able to print and save this for your own information or for your own records. And then anytime that it tells you to print out the W-4, oftentimes you can have that W-4 pre-filled out, which means that you don't necessarily have to go about filling it out. However, I will show this example. Let's do this right here. So on this one, if a person wants to, pay in a little bit more, not recommending that. We personally recommend keeping more of your money, and I'll show you why here shortly. But if a person says they want to pay in a little more, it'll say how to adjust your withholding, and it'll instruct them on what they need to do to get this overall result. So it's a powerful thing. So if you're wondering what should you do, typically it'll say right here what your refund amount is, and when you click on how to adjust W-4, it lets you know step 1, do this. Step 2, do this. And if you follow that, you end up on step 3 by submitting this new information to your employer as soon as possible. Now, I want to give you a scenario and just show you the power of how the W-4 can help a person increase wealth. Because like I stated, most people are overpaying $200 to $800. We've seen a lot more. But some people get an extra $100 a month back into their paycheck, and that can go a long way. We typically talk about it from a standpoint of people eliminating debt, taking that extra money and paying off debt, which is phenomenal. You know, lowering your debt, lowering your interest is a phenomenal thing to do. However, in this scenario, I'm going to say, what if a person is able to be right in the middle just about at $200 to $800 and increase their cash flow, bring in that much more money? And this is why you want to check out your W-4 and see if you're overpaying in taxes. Because this right here can be the very thing that's keeping you from being wealthy, keeping you from being debt-free, because you're so willing and ready to wait for a tax return. You're so willing and ready to wait for a refund. Well, waiting for that refund just allows somebody else to do what I'm about to show you you could be doing to get wealthy. So just keep that in mind, because most of the time when a person gets a refund, you know, they don't really even remember where it went. We've been there. We remember that we might have spent it on this, spent it on that, but it didn't go anything towards building wealth in some cases. So that being said, let's just switch the mindset and just be understand that you have the ability to be disciplined and be comfortable with having your own money. So many people are terrified of having their own money. You got to affirm that you're a great steward of your money and you'll do great things with it. That said, let's say this person increased their cash flow by $500 hypothetically, because that is a real scenario. And let's just say that $500 a month they were putting into investment. This is a calculator that we have. For those of you who are members or part of the royalty movement, you have the same calculator as well. And, you know, just one of the perks of being a member. Membership has perks. Now, let's say this person took that $500 and they invested it monthly. They didn't pay off debt. They just went ahead and said, you know what, I'm going to invest it. And let's just say this person said, you know, I know better than to just put my money in a savings account where they give me 1%, if that. I know better than to just get some, you know, basic investment that the bank may offer. I'm going to a brokerage account. And I'll leave where you can get 2 stocks below and open up a brokerage account. And they give you free stocks, and, you know, it's one that I use regularly, daily almost. And it really is a benefit as it relates to you putting your money in certain places that allows it to grow. But just understand that you putting your money in the bank is not growing anywhere. It's not getting you a rate of return. It's just sitting there. So some people are getting to the point where they don't even want to use banks. They'll rather use a brokerage account that gives them the ability to invest in things that, you know, they want to invest in. And now, if they decide, they can also sometimes have a card attached to it, to where you may have a pot of money that's not invested that you can spend from. And they don't use banks at all because they want the ability to be able to invest at will. Or they may not want a card attached to it. They just don't want to save money. They want to have just enough money to cover all the main things they need and invest the rest. But let's say this person was this one and they said $500 every time I'm investing it. Let's say that they wanted to, or they, you know, were going to get a 10% rate of return, which is not uncommon. I got certain investments that, you know, have gotten their rate of return in a short amount of time. By a short amount of time, I mean in a month. So 10% rate of return is not that hard to come by. I know they used to sell it as if it was, but it's not. Now, let's say they did this because they plan on being at their job for a certain amount of time. Let's say they did this for 5 years. 5 years. Calculate. All right, boom. It says a monthly investment of $500 invested for 5 years at an interest rate of 10% will grow to be worth just under $40,000. That's powerful because most of the time people won't have $40,000 stashed in 5 years if they, you know, if they were just saving. Because now your money is in a place where it's growing, it's compounding, it's multiplying. So your $500 was more than just $500. And many times if you do the math and you take that $40,000 and divide it by 5 years, your income tax return didn't match up to the amount of money that you would have had in investments had you not taken the income tax return and you invested it instead. Now, I will say this, and this is a whole other conversation. If you wanted to get a tax return, you still could if you had a home-based business while also getting part of your money back. That's a whole other conversation. If you're doing the home-based business and operating and keeping your records, there's ways that you can still qualify legally for a tax return and get an extra $500. If you're interested in the home-based business that we highly recommend because it's centered around finances, centered around you building wealth, which is what most people do when they get in business or want to do when they get in business, increase their cash flow, become more profitable, get out of debt, invest, just become wealthy overall. We have a home-based business that we recommend. Shout out to everybody who's already in. You know who you are. Now, 5 years invested at 10%. Let's say this person wanted to, do it for 10 years, and then I'm gonna switch the interest rate because I want you to know that 10% is not that hard to come by. This person did this for 10 years. This person will have $100,000 in counting if they just continue to do this for 10 years. Now you're on the path to building wealth just by doing that for 10 years. And I go ahead and do it for the amount of years that people typically work a job. Boom, millionaire status. Now you took the money that was going away. In 30 years, you're a millionaire and you can retire a bit more comfortably than what you could have had you not done this or just settled for a typical 401k. Now, I'm going to go back to the 5-year mark and then I'm going to just give a different example. I'm going to just say 20% because that's not hard to come by as well. Now, of course, you want to do your due diligence. You want to understand investing. That's not what this training is about. This is strictly math to show you what a W-4 adjustment could do and possibly make you a millionaire over a certain amount of time. But these interest rates, the higher they are, the better. Now, this is not to chase it and say that you're going to automatically get the highest return or get you to risk throwing away all your money. This is just to get you to understand that if you diversify properly and you do your research and due diligence, you can definitely get yourself in a position to where you're earning 20% interest rate, double digits nonetheless. Now, in this case, in 5 years, if a person invested that $500 in 5 years, now they got $50,000. But this is the power of compound interest because $50,000 is just, about, I think it was a little bit, well, I said 40,000, I rounded up. So it's 50,000 is just about 10,000 and some change more. So about 13,000 more than the other person's example. In 5 years, 13,000 more at a higher interest rate, which is quite a bit. But this is the power of compound interest. Let's say they doubled that amount of time that they did it, and they did it for 10 years. In 10 years, now this person has over $180,000 in 10 years, all from a $500 investment that continued to grow. Now, one last example. Let's say they did it all the way to retirement and they were getting great returns because they were an aggressive investor, taking advantage of their youth or, knowing that they had a certain amount of time before they retired. Now, I want you to see the power in this. We went from $1 million at retirement to over $10 million with the money that was being left on the table from a person who adjusted that W-4 who was overpaying in the range of $200 to $800. How many people do you know who have worked a job all of their life? They probably was overpaying $200 to $800 a month because millions of Americans do it, over 100 million, to be more specific. And they love to get that tax return every year, but they don't have nowhere near 10 million in investments. That's probably going to be 99% of people. So I want you to understand that this W-4 form is not just something you just create cash flow with. This is not just something you take this money and you blow it. This is something that if you strategically use it, it can create your wealth. A lot of times people think hard work is going to build wealth. No, it's not. A lot of times people think that, getting lucky is going to be what gets you wealthy, and that does happen. And luck is not real. You can attract certain things to you that some people view as luck. So I'm not even going to speak on that from an energetic standpoint. However, a lot of times people don't realize that it's their own money that'll make them wealthy. So where are you leaving money on the table? Is it taxes? Is it interest? Or is it right there in your W-4 form that can take you from having $500 that you're leaving on the table to possibly $1 million in retirement or even 11 million. Hopefully this makes sense. Understand the power of that W-4. Use it to build wealth. I did another video called W-4 to Wealth where I kind of did something similar, but I included debt elimination as well. But I wanted to go straight to investing just so you can see the power of it and why you need to be doing it as soon as possible. Things that I wish I would have knew sooner or taken serious a lot sooner because I understand the power of it now more than ever. That's all I got, Mr. Smith. 0.5 of Mr. and Mrs. Smith, signing out. If you have any questions, drop them below. If you want us to do any other examples, drop them below. Salute.